Welcome to today's presentation, where we have the pleasure to present Inderes. To help us through today's presentation, we are joined by you, CEO Michael Rautanen. Of course, the topic of today, Q4 and full year report and outlook for 25. That will be the main focus point on the call today, and of course the main achievements you have seen during last year. So always you're welcome to ask questions in the box down below. Do it during the presentation or after, but I think we will take the main part of the M&A session in the end. But for now, I'll hand the call over to you, Michael.
Thank you, Michael, and welcome everyone on my behalf as well. 2024 financial statements. How did the year go? Looking at it in the big picture, we grew 7%. We grew revenue on each of the product areas, and particularly in the software. That's where we made the most progress, and I could call them a few breakthroughs as well. So that business is now on a very solid track. While the two biggest revenue lines, equity research and events, more modest growth, but still our target markets declined last year. So it was a shrinking market last year. And given that we were able to grow in these conditions, we can be pleased with that. At the same time, we continue to improve our profitability to 11.6%, and one thing to highlight here was the extremely strong operating cash flow. So cash flow after investments up by 106% to 2.8 million euros, demonstrating, well, I always say this is a company founded by the equity analysts, so cash flow has a special place in our hearts. We understand how to do cash conversion and what's the value of generating strong cash flow. The second part of the year, so the second half overall improved compared with the last year, but as we highlighted in the Q3 release, the last quarter of the year was fairly weak. So it's partly due to timing issues. We had a lot of revenue booked for Q3 and not much cost booked for Q3, while Q4 was basically the opposite. So the Q4 numbers were weak. From that perspective, I'd recommend to look at the second half in total. Going more detail to each business unit. So if we start from equity research, by the way, we are now publishing for the first time the revenue numbers of each of these business lines. So equity research, 7.2 million euros revenue last year, up by 3%, strong profitability. We did unfortunately end the year with one contract less than what we had when starting the year. So this was the first year in history that the contract base declined, which we are of course not happy with. It's a very tough market. If we look at the market conditions, we are seeing this as a trend across the board. Long term, we believe this is a structurally growing market as commissioned research is the way to bring equity research for all listed companies and all investors. But the market conditions are now such that it's fairly difficult to win new customers, because this is not a must-have product for the listed companies. We are doing very well in the must-have products like press release system, investor relations websites, AGMs. But in these conditions, equity research is a bit more tough sell. Also, given that we are covering so big part of the Finnish market, and in Sweden we haven't yet been able to create the market for our product.
Do you have the number that was delisted? You know that is unavoidable. That equity research stops on. I don't know whether you have that number.
On top of my mind, I don't have the split on how many of the churn was based on delistings, but obviously it was a big part of the contract cancellations were because of delistings during previous years, especially in Finland. But we have been able to replace those by winning more companies in Finland quite successfully. And then again, Sweden. A year ago, we landed a bunch of contracts there, but last year didn't go as expected. We didn't win as much deals as we targeted, and we did lose some of the customers that came in. So during the first contract period, and given kind of like now it's been 2 years learning the Swedish market, we have fairly good sense now on what we need to do, how we need to refine our sales tactics and strategies, and we are doing some adjustments to our go to market to find the right model. So to sum it up, I'd say that we're going more from tactical sales into building the Inderes name, building the relationships towards the companies, and trying to getting through that way. Actually, pretty much the same recipe we used in Finland back in the day. Looking at the reach of our platform, how many investors we reach. So this is a new data point we are now publishing. So we had 19.1 million site visits on the platform last year. Fairly flat number, while the number of active members declined to 66,000 from 74,000. Now, why is this declining? Is because we migrated to a new technology platform 1 year and 4 months ago. And in the new platform, the content has been kept open. So you don't need to log in to access the content that much. And this has been a choice we've made. So that's why the number of logged in users is declining, but we can kind of like I can show a hard data point that the platform is still vibrant and very active. And of course, this 19.1 million, it doesn't count in the partner channels that we have, meaning Nordnet, Kauppalehti in Finland, Avanza, Bloomberg, Reuters, FactSet, Capital IQ, and so on and so on. Neither does it account for the social media channels that play a significant role in our investor or B2C reach. But now I'd say, like now that we have this metric in addition to the number of active users, it does give a bit more broader and better perspective on the reach of our platform, because that reach is also crucial for winning the equity research. When you do commissioned research, you need two things. You need to reach the investors, and the second part is that you need to reach investors that also trust what they read. So if the investors don't trust the research, then it's basically useless. So it needs to be independent, it needs to be critical, and we need to be able to also lose customers because our research is critical. And of course, we do see that in this business model, that's part of the game, and we accept it. Moving to events business, so revenue-wise, this is actually our biggest business right now. So events growing by 4% to 8.6 million last year. Good profitability level. Now this has been because of the pandemic. The story here has been it's been a super tough market since the pandemic. So what happened during the pandemic massive tailwind, like you grow 100%, and then post-pandemic, a terrible hangover throughout the whole industry. And we're now seeing, like last year, we saw that the hangover after the pandemic is resulting in some players being struggling. We've seen some bankruptcies. It's been a tough market for many. What I'm proud of is that we doubled this business during the pandemic, and after it, we have been able to maintain that volume that we reached. Yes, some product lines have been declining sharply, but we've been able to offset that with our strong focus on investor relations, building up the AGM capabilities, building up the hybrid event capabilities on top of the online events, and so on. So I think our team has done quite a great job in this business area with so rapidly changing conditions, and we do have quite strong competitive advantages and strengths in the investor relations category, given our expertise in this segment, given our reach and distribution channels in this segment, and also our technology platform, VideoSync. Of course, this business also has been suffering a bit from the churn because of delistings, and then also Sweden. I want to be fully transparent that we acquired a business 2 years ago in Sweden in the events area that has grown since the acquisition, but our ambition level on the growth is way higher, and we are doing hard work to get that business to a growth track.
Is that client, or is it the upselling to the existing client that has disappointed you a little bit? It's the number of clients I meant, or the upselling for higher quality productions?
Yeah, I'd say both, and then the churn has been also a disappointment, mainly because of delistings. There were over 60 delistings in Sweden last year. So actually last year we had some 30-something IPOs in Stockholm. Everyone is cheering, like Stockholm over 30 IPOs, well done. But they had over 60. Stockholm had over 60 delistings at the same time. So while Finland was 5 and 5, for example. So it's also the other side of the coin. But that's it. Like there are signs that the IPO window is slowly opening, both in Finland and Sweden. Hopefully, at some point in Denmark as well. Some projects that are kind of like that have actually started, and we have a signed contract. Moving on to software business, and this was the highlight of last year. So 40% growth to 2.4 million, still negative on profitability wise. So this is because of the development stage of this business. It's going from R&D phase into commercializing and growing the business, but significantly improving the profitability as well. And I want to highlight here that this business has been more or less built from scratch over the past 4 to 5 years. So kind of like I can be quite proud of the innovation capability of this organization, that this demonstrates really our ability to build up new businesses that match the Inderes concept, where we also have clear competitive advantages and synergies to the other product areas. The IR software, there we are growing the number of customers, strong growth there. both in Finland and Denmark, thanks to our partnership with you guys in HCA. So that's been a positive thing. One big highlight of last year was the video sync sales. So we landed a significant deal with a significant European event producer. So they are starting to run their event operation on Inderes video sync platform. So that is commercially an important deal for us, but it's also strategically an important deal for us. In practice, it means that video sync is the key platform in running investor relations events already in Nordic. So if you watch any of these quarterly events, it's extremely likely that it's run on Inderes technology, and going forward, this will be the case more and more across Europe. So it's our technology under the hood, connecting investors and listed companies, making investor information transparent and accessible for all. I mean, that's at the core of Inderes. So video sync also growing, and then the AGM software part of the AGM product also we kept strengthening our position in the market in Finland, and particularly landing several new big clients, extremely complex projects with companies that are listed in multiple countries. So our team's ability and the technology that we can handle these complex projects and productions is a great demonstration that we are extremely competitive in this product area. Looking things and summing it up from a geographical point of view. So with Finland, I'd just like to highlight that we have a very solid base in Finland, and we're seeing some signs of recovering in the IPO market that we look forward a lot. In Sweden, it's been now 2 years since we made the acquisition in that market. We are not happy with the growth we have achieved so far, and we are reorganizing internally, adjusting our sales strategy. We're a bit increasing the autonomy of the product lines, meaning that instead of going in with the type of end-to-end offering, we're going in with more product by product approach, trying to get into the customers. Doing these changes because well, the results haven't been what we wanted them to be, and if they are not there, then we need to adjust and change. And that's going on full speed. There's nothing new. When we start building new business from scratch, that's part of the game. You need to find the model that works. Denmark. So now I'm speaking a bit on behalf of HC Andersen Capital. A bit of this disclaimer here, but I'm also proud of what you have achieved there. I mean, Denmark has been absolutely horrible market for the past 2 years, and the fact that you have been able to grow over 20% in those conditions does tell something about the team, about the energy that you have, and also that you have built a product portfolio and a concept that has a good fit in the market. And on Inderes' behalf, I can say that our collaboration has played one part in this. So we are now live with paying customers in Denmark through HCA on each and every product that we have. So we have investor relations website live. We have the press release system. We are running these deep dive equity research contracts. We've done the pilots on first AGMs. We've done the press conferences, the IR events. So each and every product is now kind of like opened, and you know, the first sell is always the hardest.
I know. And then as you said, the need to have and nice to have. That is the business right now. You need to have the software that is need to have to really have success currently.
Yeah. And then if you really think about the life of a small cap company like us, Inderes, I mean, we need to make the life of small caps easier, and it has to be cheaper to be publicly listed. And what we are seeing, looking at this market internationally, there are inefficient structures. There's not enough competition in many of these areas. So I still very strongly believe that there is a need for what we are doing. We need to help the life of the listed companies so that it can be cheaper and more easy to be a publicly listed company. And also we need these information services for them to solve the liquidity problem that so many of the small companies have, and how you solve the liquidity problem long term. Information is the key, because if investors don't have information on the companies, then they won't trade. So that's at the core of what we do. Then highlighting just the deal we had, which is basically a European deal touching several countries in Europe, and this is also like going into this was not in our books when we did our strategy, but the opportunity came up, and we were able to shift our focus there and build a great partnership with this new partner, where we unfortunately have not yet disclosed the name, but that's now live and ongoing and ramping up. So from international growth perspective, that was a milestone for us. All right, let's dive a bit deeper into the figures. A lot of numbers here. Maybe I'll just highlight and pick a few highlights here. So recurring revenue now 60%. The base of the recurring revenue grew by 6% last year. Sweden and Finland, basically both of them grew by 7%. Cost structure has been fairly stable, so that's why we improved the profitability slightly. And adjusted EPS 0.95 compared with 0.8 last year. And there I want to highlight that the only adjustment we make there is purely accounting items that have no cash flow effect. So basically goodwill amortizations, because of the Finnish accounting standard. Q4 numbers, so not that good numbers on that quarter, just 1% growth and break-even profitability. And like I explained earlier, this was mainly due to some deals landing to Q3 instead of Q4, and then we had some projects that were postponed, some capital market days postponed from Q4 to 2025, and then we had a lot of some smaller and some bigger one-time cost items, such as moving the offices both in Helsinki and Stockholm, that put a bit extra pressure on the cost structure as well at the same time. So that's the explanation behind these numbers. Balance sheet is very strong. It's a bit lighter compared with a year ago. One significant reason is there is that we paid the second part of the acquisition payment last year. And then in the Finnish accounting standard, we amortize the goodwill from the acquisition. So that makes the balance sheet a bit more light every year. And cash flow, very strong, 3 million euro, plus, doubling the operating cash flow. And I think this just reflects that the financial foundation of the company is rock solid. And given that we generate strong cash flow, that's part of the business model. So that enables us to first continue and accelerate the investments to international growth. That's the name of the game, international growth for us, but also to continue the increasing profit sharing. So we are proposing 0.02 increase to the annual dividend paid in 2 installments. All right, then to the outlook. So basically the same as last year, revenue to grow from previous year, and profitability measured by EBITDA percentage, excluding non-recurring items, improves from last year. And the background here, last year we said the market is going to be declining or stable. Now we're saying that it's going to be stable or growing slightly. And we're going to grow faster than the market, and we're going to accelerate our investments to international growth. Financial targets. So these are the long-term targets we have: revenue growth and profitability 30 to 50%, and annually increasing payout. Last year we missed the target. It was the market conditions were tough, and given those market conditions, it is very tough to reach the level of 30%. And last year we missed it. That said, still we want to set the bar high for ourselves. We want to have ambition in the targets. The target level should not be such that you kind of like reach it very easily, especially in hard conditions. So working every day to build such structure and products that takes us to those levels. All right. Quickly summing up the big picture where we are going as a company. So this is the evolution of Inderes. Historically, 8 years compounded annual growth rate 34%. It's been the past years have been a story of transformation. From 2019, it's a transformation from one product company into a product suite, still maintaining a laser sharp focus on the investor relations segment and category. And that was a good strategic choice. We've been able to grow significantly because that product portfolio really works. And then we started to reach levels that kind of like we are running out of space in Finland to grow. Then we need to ask ourselves, do we want to grow? Yes, we want to grow. We want to challenge ourselves. So it was obvious that the next phase is international growth. For that we did IPO 3.5 years ago, and I can already say that kind of like doing the IPO was the right thing. That was the stepping stone for us to take this company to the international growth, and that's the path we've been taking. So now it's been a transformation from a private company to a public company, transformation from a very local Finnish company into an international company, transformation after transformation, and that's the name of the game for us. That's what we enjoy, and that's what we like to do. Challenge ourselves to the next ventures, and it's been an exciting journey so far. It's been a learning journey. The turning this into an international organization. Some of the hypotheses we made when we started this journey have been very relevant, and some of the hypotheses we've had, we need to challenge based on our learning so far. And this spring we are doing a strategy work. It's an open strategy process we do internally, involving all the 120 employees. So we're doing the strategy work as we speak, and we're gonna present the new strategy in a capital markets day in May. I would say there will be some updates to it. The foundation we set 2 years ago, I think that's a good foundation. So you don't need to expect that we're going to make a U-turn in our strategy, but some refining to it obviously expected, because I can tell that now we know and understand the game way better than we did two years ago. So that's it. I'll leave it for the questions.
Perfect. Let's jump into some questions. Cash flow. Is there something exceptional in 2024 why the growth is so much higher than your earnings growth, or should we also expect that to stay strong, and growing, maybe not faster than earnings, but stay at this level and move up with earnings? So how should we think about the cash flow? Was there anything exceptional, or is that your business model with of course a lot of the depreciations and so on that you might see on the bottom line in the P&L, but of course it's not a cash flow?
There were no kind of like significant one-time items. Some very minor one-time items, like some receivables that had been amortized that we were able to collect at the end of the day, but nothing significant. I think more significant is that our financial processes are just getting more and more efficient. So it's a lean and efficient machine that.
So it's a good base level to think and to grow with the earnings growth. This if we should think about it a little bit like an analyst.
Like an analyst, potentially yes, but then again, like
investments can go up and down.
It depends. It varies year from year. Like, does the payments land the last day of the year or the early January? So of course there's seasonality in that, but overall I would give quite big part of the credit to our financial team.
Perfect. And then increasing software teams you mentioned in your report, is that to make new products or to make sure you get more out of potential license deals like the large European one you announced?
Yes, it is to tap on the growth that we are seeing. Of course, we need stronger organization to deliver the growth, and not new products, but investing and improving the existing products. For example, as we go to these bigger and bigger deals, more of a enterprise grade customers, there are bigger demands when it comes to information security, for example, and those on. So there are also areas that we need to invest in to make sure that our products are capable to serve extremely demanding enterprise-grade clients internationally. So a lot of areas where we do want to invest, and of course we want to make the products better all the time.
And then with this European license deal you made, has that changed your focus? And I know I probably need to wait until the Capital Markets Day, but are you looking for more like such license deals, trying to piggyback on this one and have this as a potential showcase in the future and trying to reach out further? Or are you already identifying some license partner? Because I guess that must be pretty, as an old analyst, I guess that is pretty good margin business, licensing software out. So a little bit about whether you see more potential there, or are you already looking for other potential partners?
In a way, this was a type of deal that we have had also in the history, but they have been mainly like very small event agencies that start using our platform, and this was kind of like the major one in Europe, and there aren't not many these type of players in the market. So very, very happy with that. The deal is based on white labeling solutions, so this partner can also resell our software to third parties. So that makes it in a way scalable, because there's the
so the focus will more on making this a successful, because they have such large potential. Should I understand it like that? At such a
that's
a big way to you get a lot of contact points and has a lot of potential if you make this license deal successful for both companies.
That's a great way to put it. So that I would say has the bigger opportunity making this successful compared with trying to find
new partners,
others.
And then last question: share buyback has been used as a distribution tool for you lately. I think it's almost ending this program. Should we expect that also in the future, that excess cash? I know you can't say whether you start a new one until you do it, but should we expect that to be used as a tool to distribute excess cash besides the dividends also in the future?
Yeah, the current program is I think it's ending as we speak. Maybe this week or next week. Yeah. Well, I can say that it's in our toolbox, and the board evaluates it case by case, depending on the situation and the context, whether we use that tool or not.
Check. That was the last question I had on my paper and from the audience. Thank you, Michael, for taking us through your results and answering questions, and thank you for the audience listening in.
Thank you, Michael. See you next time.
See you.